Hi guys. Today we will analyze AbbVie stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Also recent evolutions are not positive. The short-term trend is negative, while the long-term trend is still positive. Strong support levels are around $136 and $118. Next strong support levels are around $110 and $100. Strong resistance level is around $156. Next strong resistance level is around $166. In the last month the stock has been trading between $143 and $157 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 7.5 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 18% per year, for last 5 years. We see that the average profit margin of the stock has been around 18% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 226% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for AbbVie Company: bad, average, and good. First scenario. AbbVie will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 14%. Future free cash flow to net income rate would be low, 90%. In this case, the fair value of the stock today would be $95. Second scenario. AbbVie will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 16%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $121. Third scenario. AbbVie will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 18%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $152. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.97. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For AbbVie, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for AbbVie Company: bad, average, and good. First scenario. AbbVie will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $67. Second scenario. AbbVie will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 18. In this case, the fair value of the stock today would be $90. Third scenario. AbbVie will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 20. In this case, the fair value of the stock today would be $118. As you can see, today the stock is overvalued, $147, even if we expect the company's high performance in future. While AbbVie has a good profitability rating, there are some minor concerns on its financial health. Also, the company is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. Based on that, the stock looks a bit overvalued at the moment. I like the stock for the dividend, and I own the stock. My cost basis is around $100, and I will buy more when the stock drops below $120. Company strengths. AbbVie, an American leading research-based biopharmaceutical company, was spun off from Abbott Laboratories in 2013. The company delivered strong first quarter 2022 results, with adjusted earnings rising 9% to $3.16 per share, and beating the consensus forecast for the 13th straight quarter. The company generates substantial cash flow that supports the dividend, with an attractive yield of about 3.8%, and that may be used to develop and acquire new products. AbbVie is developing new growth drivers to diversify away from Humira, still its largest product by revenue. The current portfolio includes a growing oncology franchise, along with 2 growth drivers in the immunology space, Skyrizi and Rinvoq. The Allergan acquisition adds strengths in medical aesthetics, neuroscience, and eyecare. The aesthetics portfolio includes Botox and Juvederm. AbbVie's increasing entrenchment in blood cancers should bode well for growth, as pricing power remains solid in this therapeutic area of the pharmaceutical market. AbbVie's return on assets of 9%, return on equity of 77% and profit margin of 22% are amongst the best returns of the industry. Risks. The development of new drugs from initial discovery to approval for commercial distribution may take several years and cost hundreds of millions of dollars. Only a small percentage of drugs make it all the way from discovery to commercialization. AbbVie is heavily reliant on one drug, Humira, which accounted for 37% of 2021 adjusted sales. Humira faces the risk of competition from biosimilars in the US in 2023. It is already facing biosimilar competition in Europe and other overseas markets. The company faces integration risks, as it folds in acquired companies and assets. These include larger acquisitions, such as Allergan, and smaller tuck-in acquisitions. The extra debt needed to finance the Allergan deal could put amplified pressure on AbbVie, if core assets like Botox and Humira face tougher competition than expected. Other risks include unfavorable regulatory rulings, litigation risk, worse than expected uptake of high-growth drugs, and weak Humira, Skyrizi and Rinvoq sales. The company is not financially healthy enough, and could expect problems in meeting its short-term obligations. Based on estimates for the next 5 years, AbbVie will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 6 to 10% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.